There are 3 unexpected ways that you could skyrocket your premiums, and if you're not careful, you could find yourself paying $629 a month for Medicare Part B when you could have been paying $185 a month like everyone else. And to make matters worse, what causes this could seem to be completely unrelated to Medicare at first, which is why so many people get caught by surprise. But don't worry, in this video I'm going to show you these 3 things and tell you how you can avoid making these expensive mistakes. So let's get into it. The first way to skyrocket your Medicare Part B premium is withdrawing a lump sum from your retirement account, such as your 401k or IRA. So we put money into these retirement accounts our whole lives, and many times we have the idea that we're going to withdraw it once we retire. However, if you're not careful, this seemingly proper thing to do can skyrocket your Medicare premium from $185 a month up to $626 a month. This is because of something called Medicare's Income-Related Monthly Adjustment Amount, or IRMA. IRMA means that if you make more money than a certain threshold, you're going to pay more for your Medicare. Your monthly premium is adjusted based on your income. I like to say IRMA is not a nice lady. IRMA will skyrocket your Part B premium based on how much money you make. And it's always a 2-year look back. They're looking back 2 years prior to see how much you made 2 years ago. And that determines how much you're going to pay for Medicare now. IRMA does not only affect your Medicare Part B, there is also an adjustment to your Medicare Part D. So in addition to increasing how much you pay for your Medicare Part B, it will also increase how much you pay for your prescription drug plan, even though your prescription drug plan comes from an insurance company and not from the government. So let's take a quick look at a chart here. If you're single and you're earning $106,000 or less, you're going to pay the standard $185 monthly premium. You're not going to have an increase to your IRMA Part D. It says 0 plus your premiums. If you have a Part D plan and that premium is $25 a month, you'll pay $25 a month. You'll notice for the single income earner above $106,000 to $133,000, or for the married filing jointly from $212,000 to $266,000, your Part B premium goes up to $259 a month. And whatever you're paying for your Medicare Part D, you have to pay an extra $13.70 a month. So if you're paying $100, it's now $113.70. If you're paying $0, it's now $13.70. We see this happen to a lot of people who have a $0 monthly premium plan or $0 Medicare Advantage plan. They say, what is happening? They're charging me $13.70 a month, or one of those higher amounts that you see coming up. It's because of your income-related monthly adjustment amount. You're paying more because you made more. You can see that this goes all the way up to $500,000 for individual earners or $750,000. So imagine someone who took all this money out of their IRA. Well, that could affect them greatly. Here it shows that your Medicare Part B premium can go up to $628.90, and you have to pay an extra $85.80 for your Part D. So if you had a $0 premium Part D, it's now $85.80. Or if you had a $30 Part B, it's now $115.80. That's the income-related monthly adjustment amount based on income. And remember, if you're taking money out of your retirement account and it comes into you as income, then that can really affect you. So before you take money out of your retirement accounts, your 401k or IRA, or selling some asset that you've had saved for retirement, you need to be strategic and think about withdrawals. And instead of withdrawing a bulk amount, maybe you want to split it up. Take part of it in December and take part of it in January so that you are balancing it out over 2 tax years. Of course, you can talk to your financial advisor about how to do it, but whatever the case, if you aren't careful, you might be shocked at how expensive your Medicare Part B premium and your Medicare Part D premium become 2 years down the line. Another way you could skyrocket your Medicare premiums is if you receive unexpected income. I know, unexpected income sounds really nice. I mean, who wouldn't want to receive unexpected income, like hit the lottery or whatever? However, if you receive unexpected income from an inheritance, severance pay, a large working bonus, maybe you're retiring. You say, oh, I'm going to retire right before I take Medicare, and I'm going to take this big cash out of all this stuff I've been saving my entire career. I've got the golden handcuffs, and I'm going to release them, and I'm going to take all that money now. Well, that's going to increase your income for 1 year. Now it's going to increase your Medicare Part B premium too. So that might sound unfair at first, but the good news is that there might be a way out of all this. Medicare allows you to appeal your IRMA bracket if you've gone through a life-changing event in the last 2 years. And a life-changing event would be the death of a spouse, a marriage, a divorce, retirement, as in you stopped working. It can't just be that you decided now to take Social Security. You retired from work, you had a reduction in work, you lost income from an income-producing property, you lost pension income, or your employer settlement payment. I mean, there are various things that you can use for life-changing events to appeal to IRMA, but they don't all work. So you have to make sure that you are careful about how you take money when it's time to retire. So if you have unexpected income from a severance pay, you should definitely appeal. There's a big chance that you can get that decision overturned, that it will take this year's income into account instead of 2 years ago. To appeal the IRMA bracket, you need to fill out the SSA 44 form. You need to collect evidence of your life-changing event, and then you need to submit that to your local Social Security office for consideration. Now, even if you got unexpected income from elsewhere, it's worth appealing because you can save a lot of money if you can get your IRMA bracket reduced because it was once in a lifetime type of an event. And that leads to the third way that you can skyrocket your Medicare premiums, which happens to a lot of people, and that is that you sell something really expensive, such as your house. What? My house? My house is going to affect my Medicare? Yes, you can really get in trouble if you're not careful. If you sell your house for more than you bought it for, your profit will be subject to capital gains. And capital gains tax also applies to items such as stocks, bonds, mutual funds, investment properties, a business that you own, or business assets, or something like that, right? Any one of these things can increase your income. Now, the taxes on this get a bit complicated and you need to talk to a tax advisor, but you probably guessed capital gains affect your income, which is why selling your house can really shoot you up the IRMA brackets. However, there is one loophole that you need to be aware of that can exempt you from capital gains tax when it comes to Medicare IRMA. And this only applies to the sale of a house. And so this is one that frequently we find people in. But if the profit that you made from the sale of your house is under $250,000 for one person or $500,000 for a couple, then you don't have to report it on your taxes if you meet certain exemptions, which are called the Section 121 exclusion. Now, profit means the money that you made on top of what you have paid for your house. So if you sell your home for $300,000, but 10 years ago you bought it for $200,000, that's only $100,000 in profit, and you might not have to report that on your taxes. To use the exemption and to not have to report it, there are certain things that have to be true. Number one, you have to have lived in the property for at least 2 out of the last 5 years. You have to have owned the property for 2 out of the last 5 years, and you have not used the exemption to not put this on your taxes in the past 2 years. The great thing is that you don't have to fill out any paperwork to do this. If you meet the requirements, you just don't report the income on your taxes. Now, of course, talk to your accountant, talk to your financial advisor, and make sure that this is valid for your situation. If you want to learn more about how selling your home affects your Medicare, I have a full video on it, which you can check out over here. But in a nutshell, if you're going to sell your house, you need to be aware that it can drastically affect your Medicare premiums. So be strategic about it. If you haven't lived in your property for 2 out of the past 5 years, maybe you need to move into your property for a year or 2 so that you can qualify for the capital gains tax exemption. As always, talk to your tax accountant, talk to a financial professional, because I'm making this video today and who knows what could change tomorrow, right? Now, if you'd like to learn about 7 other ways that you can reduce your Medicare costs, then check out this video over here.